to the people whose fees is still pending. So kindly clear the dues, whatever is left over, alright, by today itself, because we only have another 3-4 sessions to go. Alright, now coming to cup and handle pattern, cup pattern and double cup pattern, as well as Darvas box. We have understood the conditions that only buy the stocks which are in full of momentum, and for that there are certain conditions what Minervi has this like decided with the screeners. So only the stocks which are very close to 52-week high, which are above all the critical moving averages, and the alignment of the moving averages is as such that the short term moving average is above the long term moving average, and there's a beautiful pattern of cup and handle or cup pattern or tight consolidation breakout, which is nothing but Darvas box breakout. So I'm going back to the screener. So I hope that you have gone through the URL and are able to scan the stocks.
You are talking about this chart link.
Yes, start link.
Okay. I was able to filter the stocks, but I was not able to take one condition in which the last one. Give me 1 second. The Yeah, in which the prices, stock prices would be less than, greater than 50% of the last closed.
Yeah, not
So,
last close, it is low. This is minimum. So whatever is a 52-week low price of the stock, the price has to be at least 50% higher to it.
mhm,
Let's say the 52-week low is 100, the stock price should be minimum 150 for us to qualify to do the trade.
okay,
If the 52-week low is 200, the stock price has to be minimum 300. That is what this condition means.
okay. I could not get hold of it. Like I could not do it in the chart link. I sent you this uh, like a screenshot also.
Yeah. No, directly access the screener what I've given you. Here only you'll have to, there are couple of changes that we need to do. Let me do it quickly. So moving averages of 200.
Can you share the screen?
Sure, sure. Oh, I'm not sharing the screen, is it? Oh, sorry. Alright, so these are all the conditions for the stocks to qualify for us to trade in the short term when it comes to BCP pattern. But then not all the stocks will be following the BCP pattern. We will have to open one by one each of them and then find out if it is giving us a quality entry where the risk reward should be minimum 1 is to 2 in the favor of reward. So let me do the small changes here. One is the latest close has to be greater than 5 DMA. So all the important moving averages 5, 20. Let us see those conditions. Okay, now these stocks, hope you are already following it. All the three stocks have risen, guys. Okay, let us quickly see the price, then we'll move on. This is 46.25. In fact, it had gone till even 50, 52 also. Okay, so that's a 20% return in a matter of just 1 week. This is also 214 from 210. This one is 194 from 172. So all the three stocks have given good returns. Alright. So here the alignment should be as such that the 200 DMA should be less than 100 DMA, should be less than 50, should be less than 20, should be less than 10. Let us quickly do this setting. So on the top should be 10. This is the price. Price should be above 10 DMA. This condition is not required. Why? Because we are already setting up a condition here that the moving average should be greater than the short term moving average should be greater than the long term moving average. So price should be about 10 DMA. DMA, SMA both mean the same. Simple moving average, daily moving average. Then latest 10-day moving average should be greater than 20. Then latest 20 should be greater than 50. 50 should be greater than 100. 100 should be greater than 200. Alright, and then this all won't be required. Okay, already the conditions are here. Anyway, I am removing this. Ten greater than 20, 20 greater than 50, 50 greater than 100, 100 greater than 200. Nice. And the latest close should be very close to the 52-week high. What this condition would mean is that the latest close means the recent close should be the last 365 days latest price into 0.75. So which would mean that the price is in the vicinity of 75% to 100% of 52-week high. And the price should be minimum 50% above from the 52-week low. So all these are the conditions which are satisfying the Minervi watch list. Let me save this. Run the scan. So how many stocks have we got? 13 stocks only. So these are the only 13 stocks which are with full strength to trade in the short term. Now one by one you got to open each of them and look at for the patterns. Now which are high probable patterns is what we'll be discussing now. So what we'll be seeing here is a daily chart. Now look at this chart pattern. You will have to draw all the candles which are joining each other. Now this is what is the rounding bottom. Rounding bottom patterns are said to be very useful for good breakout trading. Now what is a breakout? When the price is coming out of a range, that is called as a breakout. So Minervi, all the trade attempts are for the breakout only. If you observe each of these patterns, we are buying it when the stock is coming out of range. When the stock is trading within range, it jams your money. It stagnates your money. That is what he says. So never ever put your money idle. Let your money work is what he says. Now if I draw this as a cup, there is another wave that I get here. Okay, so this is a 2T pattern. This one is a 2T pattern. But does it look like a perfect cup and handle? Not at all. Why? Because this looks more like a handle and this looks like a cup. It should be other way around. If I take this into consideration, this is a cup, this is the handle. So if you have observed it, this was an excellent breakout here. When the price crossed this consolidation zone, the moment this handle got crossed over, we have seen a massive movement in a just matter of 3 days. So what was this price? Around 77. How many? 4 days back it was 77. Now the price is 83. So percentage wise, it is like 5% return in just matter of a week. So this was not a good trade for us. But this is cup, this is handle. Okay. So this is your 2T pattern now. Right now, do we have a trade? No. This trade is a missed trade. Forget it. In future, it may come again with a different pattern. Then we may attempt it. But for now, this is already a missed opportunity. Do not chase the stock where the movement is already over, where the breakout has already happened. Now you'll be finding various types of cups and handle. Now this of course doesn't look like a cup and handle, it looks like a handle and cup, but I'll show you some cup and handle pattern which may not be a great trade. This was a great trade, no doubt about it. Now on what basis do we say that it would have been a great trade? So let us see more patterns and then we'll get to know. You need to find out the height and width of the cup. There isn't any pattern here. This was a Darvas box breakout. Let us change the time frame to 1 year to get a microscopic view. This was an excellent Darvas box breakout. This was a cup and handle. If I could connect this like this is a cup, this is the handle, right? The moment the price crosses the handle, there has been a one-way movement. So this trade attempt was on August or July week, mid of July. So 1, 2, 3, 4, almost 4.5 months from price 1150 has come to 1400, which is approximately 15% return in Cummins India. Then this was a Darvas box breakout. Okay, this one. We'll get back to Darvas box. So the moment the price crossed here, it has moved one way. So the trade is still continued because we'll see how to trail the stop loss and all. But still, this trade we would continue to hold. Bharti Airtel. Look at this. This was an amazing cup and handle pattern. This is the cup. This is the handle. But we would have made a loss in this trade. We would enter here, we would exit here. Okay, we would not. It is not that it has hit a stop loss, but after that we have entered, there was a sharp decline, but then price quickly recovered. So in case we had entered at approximately 800, today the price is 848 in a matter of 1 to 3 months. So that is approximately like 6% return. This would be our stop loss. Always, whatever the wave that you are considering for the breakout, the low part of that wave becomes our stop loss. In detail we'll discuss on that. Let us first only focus on the patterns. Presently, is there any stock which is giving us a good breakout is what we need to. Now look at here. A beautiful cup. Okay, this was a beautiful cup and this was the handle. An amazing pattern that we had. If we had entered here at this particular juncture, never the price went even 1% lower to it. What an amazing trade it would have been. I enter at 100, the price did not show me 99 for the next 3 months. Rather, the price has gone at least 10% higher in a matter of just less than 2 months. Okay, there are stocks which would give you 20-30% returns also. Now, is this a good pattern? This looks like a cup and this looks like another wave. It doesn't look like an handle, but it's another wave. So this is also a 2T pattern, but not a perfect setup for us because now look at here. This is again a cup. This is also, it is a 2T pattern, but not in cup and handle pattern. Here also you can see. Firstly, it has to be cup, then it has to be handle. So how do we know which cup handle pattern is the best pattern for us to have a high probable success trade? Write it down. The perfect setups. So what we do is we hold the trade for 3 months, irrespective of the gain. The stock may gain 1%, the stock may lose 1%, the stock may gain 10%, it may gain 100%. Exactly after 3 months, we exit no matter what is the result, profit or loss, so that we can use these funds for the next trade. Otherwise, we can't jam our money in a single company.
Sanjay, may I?
Sure.
Yeah. So, is this 3 month kind of a set period, or suppose I know the fundamental, just in case of the IDFC, if I know there is another quarter coming, and which may be better than the last one, as I suspect for this quarter.
Hmm.
So, can I take it more than 3 months also?
See, there are two things I told you. When it comes to technical analysis, there is zero importance of fundamentals. We are only buying purely on the basis of what the punters are playing. The stock price is rising, it means that there is some news which we may not be able to forecast. But the pattern is telling us the smart money is flowing into that particular stock, means they are more informed investors. So we are just chasing them, we are behind them. It is said that in ocean, the small fishes, there is a particular hybrid, I do not remember the name, but there is a hybrid of small fishes who are so intelligent that they are always on the back of bigger fish. They never come in front of a bigger fish. So they just go below the body of the large fish, and that is how they do not come under a prey. This is the same thing what we are doing. We are being in the shadow of the smart investors. We are totally blind. Why the stock price is moving like that? We do not have any clue, zero clue. What is the fundamentals of the company? Zero clue. But only thing that I know is that somebody is playing this particular stock and I trust him and I am back of him. He may be wrong, he may be right, but I know my exit. If he is wrong, where I should be exiting. But if he is right, along with him, I will also be rewarded. So if at all you are buying any particular stock by looking at the fundamentals or the company results may be good, then our fundamental analysis. Remember the theory of the demand and supply. That is what we need to do. That is the candlestick on the monthly chart. Mark the parallel lines below and above the price. When the price comes below, we buy. When the price goes above, we sell. This is totally different. So if you want to invest, then go with the demand supply theory. You want to trade, then go with the VCP pattern. See, this is like a T20 match. The previous one what we have seen was like a test match. A lot of patience is required. Now coming to, maybe that there is some stock which is qualifying for the VCP. It has given a perfect breakout for us, and you have anticipated that the coming quarter may be good. Also, good news is about to flow. Maybe because of that only the price is moving. That is why it is not so easy to trade on news based stocks. In my 16 years of experience, I have seen that the companies posting fantastic results have hit lower circuit, and the companies posting worst results have hit upper circuit. Initially, I used to wonder why is this happening when the company is posting good results, why the hell the price is falling down? And when the company is posting bad results, why the hell the price is rising? This all I realized when I knew about the placement of the smart money. We get to know the news very late, but the smart money is already prepared 3 months, 6 months in advance. So if any stock is moving, it means that maybe the next quarter results are good. After the results are exposed to the public, who will enter? Tell me. Public will enter. And who will exit? The smart money will exit. And you would still remain in the trade thinking that the company has posted fantastic result. Let me still be in the trade. But you're not realizing that smart money is already exiting. Maybe that the second quarter may be bad. So market always understand does not move according to the current conditions of the company or the index. I've already told you an example. During the COVID time when the country was under a lockdown, the market started rising sharply. If you look at the current economic condition, that was worse than even a war. In the war, at least the economy is open, the business is on. Here it is all the country shut down, everybody is in crisis, right from the banks, the NBFCs, the small business, the laborers, the large businesses, everybody was under crisis. The government tax collections were under turmoil. But still the market was rising. Why? Because the market knew what is going to happen after 6 months. Market knew what is going to happen after 12 months. So market is always forward looking. Today when I look at lot of companies within the Nifty, they look very expensive. But the chart patterns in them says that they are still going to rise. Why? Because maybe in the coming 3 months, in the 6 months, they are going to post some fantastic numbers. That's what the charts are indicating. So, as a technical analyst, give zero importance to news, to what the news may flow, what the event may happen, or what are the fundamentals of the company. Totally zero importance when it comes to trading. See, in 3 months, company's fortune do not change, right? So, what is the point in looking at the fundamentals? We have to look at the fundamentals of the company when we want to marry that stock. Warren Buffett made maximum wealth from Coca-Cola company. He held the company shares for 40 years. So he says that he has literally done a second marriage with Coca-Cola. His 50% wealth got created from Coca-Cola. It happens even in land. Today, the people are crorepati, whoever has bought land 30, 40 years back, no matter wherever in India, any corner India, even in jungle area, if they have bought a land 40, 50 years and they have held it, non-litigation land, they have automatically become crorepati, even if they had invested 1 lakh, even if they had invested 50,000. Non-agriculture land also. Because they have given such kind of time. So likewise, when you are investing into any company, you are believing that the management will continue to grow the company for years and decades. So that technical analysis is only the demand and supply. We exit only when the market is signaling us to exit. Example, like I've recommended Ramco Cements. Why? Because it's an old economy stock. Yesterday itself it rose well. I recommended in the group. I think you all must have noticed that. In case anybody is not in the group, kindly let me know.
I am not, Sanjay.
I'll add you. So yesterday itself it rose by around 15 rupees. I'm expecting the price to cross 1000 and go to even beyond 2000 in the next 3 years. Why? One is company fundamentally strong. It had already given us a buy in the demand zone. And lastly, this is the two phases of the market where the old economy stocks like cement do exceptionally well. So by all means, it looks like an excellent buy. Even at this price, it looks like an excellent buy. I bought it 3 days back, 850 shares of this company. Alright. So when it comes to VCP, become totally blind about what that company is. Only your focus is the company name and the buy and the exit. And we are totally blind what is happening. We don't even have to read the newspaper. We don't even have to watch the television channel. We have to only look at one and only one thing, that is chart, chart and chart. That is what is a technical analyst. That's why I told you while beginning with the technical analysis. For a technical analyst, doesn't matter whether the chart is of Hero MotoCorp or whether the chart is of Infosys or whether the chart is of dollar or whether the chart is of say copper. It could be commodity, it could be Bitcoin, it could be your stock market index, it could be stock, it could be sector. By looking at a chart pattern, he can only tell to an extent what is likely to happen in the near future. Just like in astrology, an astrologist will read your finger lines and will tell. It doesn't matter whether you are young or you are old, whether you are male or you are female, or whether he's seeing the reading in the morning time, evening time, afternoon. It doesn't matter. Just on the basis of lines, he will tell you what is your intelligence. All that, he's not going to ask you how many marks have you scored in maths. He's not going to ask you like how your past has been. But just by looking at the lines, he will tell you that this should have been your past, this is likely to be your future. Likely. That's what even chart says. That's a likely the pattern that we are going to get going forward. I told you here the success ratio, expect only 60%. Out of your 10 trades, 4 will get failed. But your wins are going to be double than the losses. Even 50% if you are right, you will end up making money. Only thing is control your emotions and play with the same amount in every trade. I repeatedly told you that it is very easy right now to mentally prepare for it, but when your money gets involved, it is very likely that you will go out of the track. That is why trading is not an easy task. Back to back profit trades, back to back losing trade. Are you going out of the track? That will define you whether you have matured as a trader or not. That is why only 1% of traders make good money, intraday traders. Only 1%. 10% of short term traders make good money. 80% of the investors make good money. So you should be maintaining at least 2 accounts. That's what I do. I have one account wherein I buy the stocks and I forget it altogether. I only look at the market cycle and accordingly I exit. And another account that I have it is for derivatives as well as short term trading to make some supplement income on that. So whatever the revenue that I get out of the derivatives as well as the short term trading, with this money I buy some quality stocks in my investment portfolio account. And that is what any good trader would do. This is something to get extra out of what you already have. Okay, so here the perfect setup for any 2T or 3T pattern should be as such that the depth of the cup must be at least double the handle, and so is the width, the surface. So let us say in the previous pattern, now this is the cup, okay, the depth of the cup, this is the handle, right? Handle can be short, it can be big, but what we have to see is the width, the surface of this handle is much lower than this particular surface. The first wave surface should be at least double than the second wave surface. This is condition 1. Condition 2 is the depth of the first wave should be at least double than the depth of the second wave. So it is matching both these conditions. That is why it becomes an excellent trade for us to attempt. That's the second thing, that we did not get good reward, but we did not get loss also. Some trades will give you a reward like this, like a rocket it would move. Out of 10 trades, 1 trade will be there. That is where you will be gaining maximum income. See, in a cricket team, we don't know which batsman is going to play today. But one batsman, if he hits 100, if he hits a century, then the entire team's scoreboard is made. So likewise, we are attempting this trade. Our expectation was, while we are entering here, our expectation was that it will go here. But it did not happen. In fact, it became stagnant and it ended up here only. It has only given us few percentage points of return, which is not satisfactory. But I told you, you attempt every trade like this, one trade will be there which is going to go like this, parabolic. That one trade only will make up for all the trades that you have attempted. And we never know, we cannot judge which could be that company. But yes, out of 10, one such company would come. Even I don't know in this list which company might have risen so sharply. Let us see one by one all of it. I want to look at a trade which is giving us an entry in the next couple of days. Then we could even test it. This is very, very important. Another point. Do you see here two names, Ambuja Cement, JK Cement?
Sanjay, can I ask a kind of a not very intelligent question here?
No problem. Do
Yeah.
ask.
So suppose we are testing a trade. So how much amount of money that needs to be kind
Huh.
of a put in?
We'll come to it. We have not yet come to risk management. Right now, we are only looking at good patterns, then entry, exit, how to prepare the Excel sheet, how much money to deploy, and how to reuse the capital, how to compound. All that we will come.
Okay.
Yeah. But here, one thing if you have observed, lot of times you will be able to see that once it happens in 3 months, that multiple stocks from the same sector will pop up. Very, very important point I'm telling you. Multiple stocks from the same sector will pop up. The reason behind recommending Ramco Cement is also one of this reason. Not only that, there was another company yesterday. Three cement stocks popped up. That means the cement stocks are on move. There is no news anywhere. News may come very soon. You'll be able to hear some kind of good news from the cement sector. Maybe that they are raising the prices of the cement, or maybe because of Gujarat election, there may be some big infra projects announcement, or maybe because of the central elections which is going to come in the next 3 to 6 months, there could be big announcement regarding the road or construction, or maybe because we have a budget in the month of uh, January last or February 1st we have budget, there could be some big time announcement, either could be cement directly or could be infrastructure where cement is used, maybe housing, we do not know, but for sure something is going to come, and my expectation is that something is likely to come in the budget. Now who will buy during that time when the good news comes? The public. And who will exit? We will exit. Do the opposite of the public, you will be a winner in the market. Because in the short term, 90% of the retailers lose money to 10% smart people. Be smart. This thing you will realize out of 10 years of trading, which I am telling you beforehand with my experience. So at least you get to know what shouldn't be done. The fee what you are paying for the stock market is not only for what should be done, but what shouldn't be done. In fact, what shouldn't be done is more important than what should be done. Rather than wasting 10 years of your life, rather than putting all your money and jamming it, or maybe even making loss out of it, just with this money you will be able to at least have an opinion of the person who has already been into the trade for a long time. Any trade that you feel that is good, or you may want to attempt it, you can always ask me lifelong. Now we have a relation lifelong. My group would continue till my last breath, till it is useful to you and me both. Okay. And then Punjab National Bank, ICICI Bank, IDFC First Bank, IDFC. I also see that banking stocks, NBFCs, even Aditya Birla Capital, these are the stocks which are coming up as a common stocks from a sector. So going forward, these two sectors look very, very promising, cement and banking. So maybe in the next 3 months you will see that if market is rising by 2%, these stocks, the stocks from this sector may rise by 4%. Market rises by 4%, they'll rise by 8%. An important note, write it down. See, every word, everything is very important. If you see, there are only 13 stocks which are popping up, and in that we have found two sector stocks. It's very rare find. It happens once in 3 months. But lucky that in a single, that today that we are checking it, we are able to find that. Otherwise, through my experience, I see that majority of that it will be all diversified. And there's an event which is going to come, that is a budget event. So maybe this is a budget play. One thing is very clear, that smart people with huge money like Rakesh Jhunjhunwala and all, they are back of cement stocks, they are back of banking stocks, and they know through the finance minister, associates, or somebody, they know for sure that what is the news going to come. See, more money they have got, then the relation will also be with the high profile people. So we don't have a reach till there. That is why our job is just to be back of them, act like a shadow. That's all. But so far, okay, now here is a pattern. This is what I love. Look at this, a beautiful cup and a handle in the making, still not a trade. May happen tomorrow, may happen today. Either a big candle has to come today. Each candle is one day here. So either we come to a big candle here, or maybe next couple of days, or may take even a week. But there is a trade in the making here, which is Ambuja Cement. Where we would buy? We would buy exactly at the high of this one. So when you put your mouse over here, you'll be able to see the high low. So what is the high here? 593.5, and this one is 593. So 593.5. The price crosses this, then only we would enter. It may also happen like that the price will go here, here, here. It doesn't cross here, again it will turn here. Then there could be like 2T pattern. See here, 1, 2, and then there could be a third small wave. 3T patterns have got 70% success ratio. T pattern 50%, 2T 60%, 3T 70%, Darvas box 70%. Look at this amazing Darvas box. We'll get back to Darvas box later. Amazing breakout. Huh? So many days stagnant period had come to an end. In fact, this is more tight consolidation. How much tight the band is, that much better the price will fly. Okay, it's like a cut tape, and after it broke out, see from where the price has moved. So just 4 months back, if you had attempted to buy it at 380, had you bought it at 380, all the way it would have gone till 600, 550, sorry. $590. From 380, if you had entered at when? August mid. Okay. So August mid, I enter it at 390, or let's say 400 approximately, and the price today is 570. So that is almost like 70% return in 1, 2, 3, 4 months. 70% return in 4 months. You yourself can do the maths to find out what is the power of compounding, which can give you amazing return. There would be another attempt on the trade. We would have already exited by the end of these 3 months, maybe somewhere here. Even then it is like 60% return. But again we would re-enter this stock maybe next month, or maybe in the next week, after this wave gets completed, or maybe another wave is in the making. But this is a potential trade in the near future. So what you'll have to do, how you'll have to plan your trade? Always better maintain Excel sheet. I love Excel sheet when it comes to stock market trading, because whatever you may say, after a year, after 2 years, if you say that, sir, I have matured as a trader, I've made good money in the trader, I'll only ask you one thing. Just show me your Excel sheet, what you have done. Just show me your profit loss report. That is what is the certification. Nothing else matters. Today, how much ever I may boast that I am 16 years experience, or I've read so many books, all that is of no use to you. What matters is the record. What is the proof that I made money? That is only the profit loss report. So that's the reason why in my very first class, in the demo, I directly open my account and show what I made. And you'll come across a lot of traders who will be exposing themselves in Twitter that their fees is 50,000, 2 days workshop and all. They will not show even a single day profit loss report of them. But they'll show certification, NISMC, 4 5 certifications I got. What to do with that? You can get a certification even by just reading the theoretical books or just by reading the FAQs. But are you already into the water? Have you already experienced all the waves of the market? That matters more. And no trader, mark my words, there is no trader who is successful who has lost once big. Meaning today, whoever is a good successful trader, for once he must have got a big beating from the market. If he hasn't got it, then do not trust that trader at all. That means he hasn't seen the tough time at all. Just like saying a cricket player has always, you have watched 4 matches of a player, but always the pitch has been a batting pitch. You can't judge him. Make him play even in the bowling pitch. Then only you will be able to judge who is a great batsman. Okay. So firstly, the watch list. One stock which comes in our radar is AMPUJ, Ambuja Cement. So in the next couple of days, I should be keenly watching because there's a pattern in the making. And what would be our price to enter? And I'll tell you like how you could feed the trade before itself. Now let's say this may happen today. You are already working professional. You can't keep monitoring the market. Sir, every minute I can't watch Ambuja Cement whether the price is crossing that or not. Can I put a trade before itself? Yes, you can, which is called as offline order or after market order. Let us first mark the point. Hold on. Hello? हाँ हाँ डाल दिया मेरे को था स्क्रीनशॉट भेजो
हेलो
हाँ
5 दिन जाएंगे बात देखिए
था ना वो भेजो देखो 2 लाख माइनस में है
हल्दी
हाँ
हल्दी 2 लाख माइनस में
हाँ था ना मैसेज भेजो मैं
ठीक है तो मैं 2 लाख में कोई वीडियो मार देती है वो बेच दे
हाँ
रखना चाहिए नहीं
देखा मार्केट खुल्यापच चेक करला मा मार्केट खुल्यापच है कोई भी कंपनी हाँ ठीक So when you see multiple stocks popping from the same sector, then say likely that the sector is going to perform. And any stock which is about to meet a pattern in the coming few days, please keep a note of those stocks and the entry point. We do not yet know what is the exit point, but we'll put an tentative exit point. $593.5. Now you may say, sir, why not we buy at 570? Why should we buy expensive? I told you for short-term trading, the rules are totally opposite. If you are a fundamental investor, then you think about bargaining. Buy lower, buy lower. That's what you need to think if you want to invest into any stock. But if you want to trade any stock, it's for short term. There is fire in the stock, take advantage of it. Right now, there is no fire or the potential fire is missing. The real fire in the stock will come when the recent high is broken out, where it shows maximum strength. That means it will be trading already at the sky level. The demand is much higher than the supply. Then only that price comes. Then only for few days or for few weeks we will be holding on to this trade. I told you the low of any particular stock in this short term trading is the waves low point. So when I put my mouse over here, the low is 491. Sorry. The low is 554. 554.55. Just look at this figure, okay? See, this is the handle low, isn't it? 554.55. So we would enter here. This would be our stop loss. Okay, And target, I told you 3 months. Like this, you need to maintain your own Excel sheet. There may be now in 30 days of a month, 8 days are holidays. In remaining 22 days, 12 days you won't get any trade. This is the problem with the short term trading. It means that no pattern looks probable. Only 10 days you'll be getting couple of trades. Only 10 days. Those are the only 10 days that you'll be trading. That's why patience is very, very important. When money is there in your account and you're not able to get a trade for the next 4-5 days, you'll get an itching, Or your market is moving, but I'm not able to enter into any trade. I'm missing out the opportunity. This is called as FOMO, fear of missing out. This is very dangerous in the market. Let it happen. It is their turn. Your turn will also come. In the famous ad, it says, "Na, mera time aayega." Wait for your time to come. If the public is making money, let them make. When your turn will come, you will hit a chalang. That means you will have a jumping trade. What they made in a month, you will be able to make in a matter of few days when your turn comes. There may be people who are already buying it at 570 and mocking you that, oh, I bought at 570 and you are buying at 593. At this 570 level, the confidence is low. The confidence would be higher only at this level. We want probability. That is more important. What if the price goes 570 like that, and if it turns like this, what will you do? Where will you exit? So do not ever attempt a trade till there is a confirmation in the signal. This is 2T in the making, but it is not yet made. Let that entire wave get completed. We never know, it may turn like this, or it may remain like this stagnant for 3 months. Where will you exit then? You have jammed your money. You won't be able to use these funds for your next trade. Only by confirmed signal trades, that is all. And this could happen any day. Even I do not know. It may happen today, it may happen next week, it may happen next month. But the moment it happens, if the pattern still continues as a cup and handle with all our conditions, that the depth is, the first wave depth is more than double, the first wave width is more than double, then we just attempt the trade. We know where we have to exit in case we are wrong. And you will be wrong at least 4 times out of 10. Be prepared for it. So only once we have entered it, we'll be able to define the target by the date terms. Only after we have entered. This trade is already got over. It's a missed opportunity. Doesn't matter. One is gone, the other will be there. It's just like a metro train. One metro train goes away, the another will come. Just like buses. One bus goes away, the another will come. Never regret what you have missed. Like say, we have missed a very good trade in Ambuja Cement. 70% return in 7 months. That's how one trade will be out of 10. Don't regret, leave it. Some other Ambuja Cement will come in your account. Say this is the T pattern, already broke out here. It's only a single T pattern. This is also a missed trade. Okay. So this was the entry. The trade is still running. This would be the stop loss. Oh, this was a wonderful trade that missed it. But of course, it's not a perfect cup and handle. See, this was a cup and handle. AB Capital, first wave, second wave. So where we would attempt the trade? At an high of this. That is how Ambuja chart will also look like going forward. This is the expected thing to happen. So here had we entered, our stop loss would be here. Okay. But had we entered at 122 approximately, today the price is 148 in less than 1 month. This was on the day when you put your mouse, you can see here it is November first week. So some 25 days we can say. In 25 days the returns would have been 25 or it means 20%. Amazing return. But unfortunately that's a miss bus. Now is this a good trade? This is wave, this is another wave, and already it broke out yesterday. I would not attempt this. Why? Because if you look at the width, I told you this width has to be at least double than this one. That is not the case here. So no matter what, we are not going to attempt the trade. Maybe the price will go like this higher also. But the historical data proves that such kind of patterns have huge failure ratio. So wherever there is risk, we would want to mitigate that risk. Though I am confident the banking stocks will do well because multiple stocks are coming there, but the VCP pattern is not suggesting. So no matter what, I am not going to attempt this trade. And as expected, the index is also moving higher. I told you, we may move very sharply higher, then we may fall. Probably the month of February looks dangerous to me. Anytime from here on, from December till February, anytime there will be a drastic fall. So November passed by, nothing happened in November. So December is already a dangerous month according to our data analysis. And then December, January, February. Why I am not expecting a fall in December? Because we have a big event coming, that is budget. Post budget is where I am expecting a very good fall in the index. So whatever that the trades that you have taken for short term and all, I would be suggesting you to book at least partial profit and do hedging strategies on the reverse, on the falling market. So what strategies I'll be attempting, I'll be sharing with you. Now, is this a good pattern? Apollo Tyre. This is a 2T pattern. Already it broke out and it gave a very good movement, but it wasn't a great pattern. Why? Because this is W. The depth is not half of this depth. I told you this depth has to be double, but it is almost the same perpendicular line. So it's not a good trade, though it has broke out nicely. So this is only one wave breakout which has happened. Now maybe a lot of candles are getting congested here. If another few days it gets congested, then maybe we'll be getting a Darvas box breakout. See, this was a cup, this was the handle. Anyway, it broke out, price moved higher. Right now no trade. So none of the stocks are giving us a trade, only one stock is in our watch list. Okay, so there will be dull periods. There will be certain days where no trade attempts will be made. Then maybe in intraday you are getting some setup. You may not be getting any entry on the 3 months trade, but you may be getting an entry on a single day trade. So that is how you may remain engaged. But never force yourself into any particular trade just because you are not getting any trade signal. Don't think that, okay, let me just attempt a trade based on the news. Some good news is expected on some company, the fundamentals look strong, the company is going to declare the results, you are deviating. You are going out of the track. Chances are you'll be hit with a loss making trade. And that 1-2 couple of losses you get, again you'll go into a revenge mode to recover the loss from the similar kind of setup. That is why balance, emotional balance is very, very important for any successful trader. Every book has this common point. Every book. Emotions, zero value when it comes to trading. I'm saving this sheet so that we can continue to put our stocks. Tomorrow we may get different set of stocks. For today, the only probable entry for us is Ambuja, and whether price will cross this or not, we do not know. But in case the price crosses this, as a working professional, because I cannot monitor it, how should I feed my order? Let me show you that. Let me first save this. Tomorrow we'll be discussing the risk management, how much money to be deployed and all that. Darvas box also we are yet to see. 3T. We haven't yet seen 3T patterns. So we are not getting any 3T pattern right now in the daily signals. Maybe we'll be getting some in the intraday signals. Now I want to feed an order that enter at 593.5. How should I feed it? Like this, you will be having your own terminal. Okay. Okay, now let's say that I want to feed an aftermarket order. What do I do? Like this, you will be given a terminal after you have opened a Demat account anyway. So in IIFL, this is how the screen looks like. So you go for the company, let's say NSE. Ambuja Cement is there in both NSE, BSE. Anywhere you can attempt a trade. Ambuja Cement, okay. The price is right now 570.75. I select it. Here I go for aftermarket orders, buy order. How many? Let's say I want to buy 100. At what price? 500. Now here we don't want to buy at this price. We cannot put a higher price here. Even if you put a higher price, it will buy at a prevailing price because the price is already lower to the price that you are demanding. So the trade will get executed. I only want to buy if the price is crossing a certain level. Just hold on. Hello. $392. क्या बात कर रहा है? कितने है होल्डिंग? 392 में 100 डाल 100 392 मंजे दी ना. अच्छा 390 में डाला. Okay, so what you do is we go for aftermarket order. Buy order. I buy only when the price is crossing a certain level. So here I need to select as stop loss market. In detail I will be explaining you tomorrow. Stop loss market, and here I mention the trigger price. That means my trade should trigger only when the price is crossing a certain level. That's all. Just mention the quantity, how many shares you want to trade. This quantity, how do we decide? Based on the capital. Tomorrow we'll be discussing that. And give your client ID. Example. Like this. Clear? The trade would be available here. Fine. I'm cancelling it because that's a B&A. But this is how that we put any particular trade which is called as aftermarket order. Then you don't have to even watch the market. The trade will automatically get executed if the price is crossing that level for the day. Every day you may have to do this. Alright. So that is all. It's already time. Any doubts, questions you have got, you can make use of the chat window, the audio control. Tomorrow we'll continue from here.